Okay, part two for my analysis for December the 3rd, 2018. Okay, stock markets, US stock market. So pleased with last week's rally. That's what I was looking for. We did have a little bit of resistance along the way, but we had no trouble really. We may have paused at those resistances, and it was worth trying a short because you never know when the market might reverse. But as long as you were stopping and reversing back into longs, that strategy worked fine on a day trading basis. So now we're through this trend line. 200-day moving average for the Emini S&P at 27.63, but judging by what's happened at the G20 over the weekend with Trump and China coming to some agreement on freezing future increases in tariffs, the stock markets look like they're, I think, maybe 1% higher or so. So we're probably looking at testing the 55-day moving average on the open around 27.78. I think the path is pretty clear for further gains. We could get up as far as the 2018s area, which is obviously a problem, or should be a problem. 61.8% fib, 100-day moving average. Those levels have worked fine when they were tested the last two times, so I don't see any reason why they won't work again. Definitely worth trying a short up there if we get there. Not saying we will. We're not overbought, but this is what concerns me. Let me just try and, there we go. The potential head and shoulders pattern. So big left shoulder, head, and then is this a right shoulder? Well, this could have been a right shoulder, but we held the support, and I did think we were going to hold that support, so that's fine. That works. But maybe we'll build a big right shoulder here through December and then collapse in January. No point jumping the gun. Let's just trade the levels. Let's see what happens up here in the 2018s area. If we start getting up through 2820, that would be bullish. So Bitcoin consolidating really, and you can see that the first 23.6% fib at 4,400 has really done the job there. The weekly chart gives us some small reason to be positive. So we've held the 200-week moving average. We've held just above it, obviously. So we've got that. We've got what was an oversold situation, but that's now been neutralized as the stochastics bounce back. So we're going to have to get through 4,400 for this to be more bullish. But I could argue that this is an inverse head and shoulders pattern with a small double bottom as the head. So a break above 43.50, 44.50 would be a buy signal. By the time we get there, of course, this is a 4-hour chart, so this moving average will have been a little bit lower. So I guess we're talking at about sort of 43.50, 4,400 would be the key resistance level, and that ties in with the daily chart anyway, that fib. So break above 44.50 could be a little buy signal. Don't get overexcited. We can probably only get up to 5,000, maybe 5,500. But still, that's a nice trade if you can jump on it. The scope, really, the measured target would be 1,000 points, 1,000 pips. So really, if we got up to the mid 5.5 area, yeah, that would probably be the selling opportunity. Again, I don't see this as the beginning of a bull trend, but certainly little bounce back could happen, and I'm not usually bullish about Bitcoin. Dow Jones continues to be very volatile. A good bounce back last week, exactly as I had expected. I did think that I think I had 24, 270, 230 as a support level, and that was perfect. We bounced right off the trend line, the fib, just as I suspected we would. Stonking rally. Again, obviously did have a little minor resistances along the way, which were worth trying a short and reversing back into longs. So that strategy worked. By Friday we got up to 100-day moving average, 55-day moving average, but with what's just come out from Trump and China, looks like we're 1% higher. So we could get up to test this trend line up here at 25.9, the 25.900 area. We start getting up through 26,000, that's going to be more positive, and we can certainly retest the November high at 26,268. We'll see where we go from there. Yeah, that's it. I think there's nothing else to say. Quick look at the weekly chart in case I'm missing anything. I don't think I am. No, not really. Again, you could argue that this is left shoulder head and we're forming a right shoulder. It's yeah, I mean, this left shoulder is below the head, so you can still argue it's obviously a similar pattern to the Emini S&P, and with this clearly we would need a break below 24,000 for a longer term sell signal. European markets really not doing well, not able to follow the US markets higher. This is the DAX, and really this head and shoulders pattern, which I wasn't sure if it would hold. I thought the US markets would rocket last week. They did, and I thought the DAX would follow. It didn't. So again, this neckline to the head and shoulders really has held in the 11,450 to 500 area. Now, where do we get to? 11,440. So really, this doesn't look good. This does not look good for the DAX. The head and shoulders pattern is definitely intact. It's a textbook retest of the neckline. We've also got the 200-week moving average there. So there's a lot going on in the 11,450, 500 area resistance. If we do get, I think we've looking at weekend markets on IG, that kind of thing, does indicate that we're coming back up towards this level. So we might get a selling opportunity again. It's definitely worth it's definitely worth trying a short here. Stop above 11,600. If we get up through there, then you can say the head and shoulders has failed. But for now, you can see it's working. We've got this longer term trend line, which did hold as I suspected it would, but we didn't get the bounce back that I thought we would. But I put it in heavy, in a heavy line here. It goes all the way back to the end of 2011. So it's a good 7-year trend line, really held nicely. So these, again, are the important levels. I'm sure you know this. 11,450 to 11,500. Break below 11,000 is going to be a longer term sell signal, and certainly would indicate that this head and shoulders pattern comes into play. Now, the measured target for that is it's almost 2,000 points from 11,400. So we really could be looking sort of 11,900 area. Sorry, we really could be looking at the 9,000 area, and just conveniently, we've got the 500-week moving average down here at around 9,000. So there you go, longer term view, but be a lovely swing trade, wouldn't it? Nasdaq starting to be worth a look. We've got some interesting patterns developing here. Now this is more of a clear-cut head and shoulders pattern. Left shoulder, head. Are we forming a right shoulder? I assume that this is 1 or 2% higher on Sunday, Monday, following the other US stock market. So we could be 60, 100 points higher. Which could take us anyway. We've got the November high at 72.31. We could go higher than that and still turn around and form a right shoulder. Anyway, again, don't jump the gun. Obviously, we've got important support down here around 64.5, with the 100-week moving average just a little bit lower. But of course, by the time we get there, this 100 moving average will be touching the neckline to the head and shoulders. One to watch. Don't jump the gun. Let's just sit on our hands, keep the powder dry. Because if this trade works, we're going to be getting short, and we're going to be running this position, probably down to the 200-week moving average in the 55 area, 5,500 area, 5,400. Could be fun. There could be some real nice swing trades next year.